We're going to be talking about Tesla today, and this is a stock that I am very bullish on. I mean, it's not very often that you find a stock that has the potential to 100x, but doesn't have the downside that those kind of stocks usually have. I mean, usually when you find something that has the potential to 100x, usually you're not too certain on that. So maybe you don't put your whole portfolio in it. Maybe you put like 5% in. And the problem with that is, unless you already have a lot of money and 5% is a significant amount, even if it does 100x, sure, you've got a nice chunk of change there, but it's not life-changing. But what if you were pretty certain on that stock, and instead of saying, oh, it has the potential to 100x, but it could also go to zero? What if you thought that probability of it going to zero was much, much, much lower? Now, Tesla could still go to zero, but in my opinion, and I'm not a financial advisor, I don't even really know what I'm talking about here, but in my opinion, I think the probability of Tesla going to zero is much lower than what you usually find in a 100x potential stock. And because of that reason, because I think it's like less than 1%, I feel so comfortable being able to put almost all of my portfolio into Tesla, which, hey, if it goes up to 100x, that will be life-changing. And I look at it as my downside. If I'm wrong, it goes 10x. And I'm like, oops, 10x. I mean, come on. When do you ever find something like that? And so this video, though, isn't necessarily for me to try to convince you that it's going to do that. You should make up your own mind. But what I do want to share with you in this video is how I think Tesla could have the potential to 100x. Because I'm sure a lot of people hearing that, especially if you think Tesla is overvalued, think I'm insane. So I want to show you how Tesla could potentially 100x and why people are still so bullish on this stock. Now, we have to go over a couple assumptions first before we can even go into this model. One, we're assuming that full self-driving is right around the corner, that they're going to achieve it and it's going to be good to go, and that regulators are going to approve of it pretty soon. And if that one's a tough pill for you to swallow, I really encourage you to check out James Dauma's interview on Dave Lee's channel, where they actually do a model showing how many miles of data would it take to prove to regulators that with a 95% or greater accuracy that full self-driving is at least as twice as good or as twice as safe as a human driver. And so that video was it was really insightful, and it's not going to take long, only about 2 weeks. And if you change a few variables and go with the bearish scenario, 2 months. I mean, it really doesn't take long. So full self-driving right around the corner. And then number two, we need to assume that they're going to be able to get their cost per mile down low to about 5 cents per mile by a couple things. One, producing a car for a cost of $20,000 or less, and being able to achieve a 1,000,000-mile lifespan per car. So now with those assumptions out of the way, if you don't agree with those, you will not agree with this model. Now, if you are one of those people who does believe in the robo-taxi model, a problem that we commonly find is, well, how many taxis are they going to have in 2030? What are they going to be charging per car? And usually it's just kind of a random ballpark figure guess. You use Elon's model where you get 300 billion off of his 10 million fleet. You use, maybe it's 50 million and they get $20,000 per car. Maybe it's 100 million and it's 10,000 per car. But no real kind of really like thought or a model trying to figure that out. And that's what this model is trying to do, is figure out how many cars are they actually likely to probably have in the robo-taxi fleet, and what will they probably be charging in 2030. And so something that I found really helpful to do this is we're going to take a look at ARK Invest's model, where their price prediction for Tesla. And one of their tabs actually has a price elasticity demand table for the amount that they're charging per mile for each ride, and how many miles that translates to, like how many people would they serve. And so if we look at the top row on the left column, we'll see that if they're charging $4 per ride, which is well above Uber and Lyft now, I shouldn't even say well above, but it's above them, they would get 1 billion miles. And as we see, it goes all the way down to, if they're charging 25 cents per mile, they would get 15 trillion miles. Now, I'm sure ARK Invest is still guessing. I mean, they don't know for sure, but I feel like they probably have done some sort of research into here and put some logical thought into creating this model right here, this price elasticity of demand, to figure this out. And so I'm going to build off of their research here and go with this model for our estimates to help us refine it even further and figure out if Tesla decides to go with the robo-taxi model of owning their own Teslas, not selling them anymore to the average consumer, unless you want to pay a hefty price, how much could they be worth? So if we look at the first one, what if they were to charge 50 cents per mile and they're serving 1 trillion miles? How much would the stock price be? Well, let's look up here on my model sheet, starting with miles served in column D, 1 trillion. Now, 1 trillion miles were served, but that's not the total miles driven. We're assuming that 60% of the miles driven were served. So that's how we get to a total miles driven of 1.6 trillion. Now, if we're charging 50 cents per mile on 1 trillion miles, that gets you $500 billion in revenue. And then if our cost is 5 cents per mile on 1.6 trillion miles total driven, we got 83 billion in cost. So our gross profit in billions would be 417. Now we're going to assume a 30% tax. I don't know what the tax will be, but I'm sure it's probably going to go up. And I just want to make this model a little bit more conservative. So we're assuming 30% tax, which gives you a net income of $292 billion. With a 40 PE, that gives you a market cap or a stock price of 11.6 trillion, almost $12,000. And now again, this model is not taking into any consideration of any other revenue sources. No future revenue sources like Dojo as a service, no energy business, no solar panels, nothing, none of that. So these are even conservative in a way if you consider that. Now let's go with the Super Bowl case scenario. They got their price down to 25 cents per mile and they're serving 15 trillion miles. That would bring them a total revenue of 3.75 trillion. Now their cost per mile, or their total cost, assuming the same 5 cents per mile, would be 1.25 trillion, giving them a gross profit of 2.5 trillion. Again, get rid of taxes, gives you a net income of 1.75 trillion, with a 40 PE is $70,000 a share. And so that is how you get to a 10x. But how likely, here's the problem though, of why they probably can't achieve this 15 trillion. How many cars would they need in order to achieve, in order to serve 15 trillion miles? Well, if each car is able to serve 60,000 miles a year, we're going to take 15 trillion, divide that by 60,000, and you're going to get 250 million. So Tesla needs 250 million robo-taxis in their fleet. Can they achieve that by 2030? Well, let's take a look. The next thing that we're going to assume is that they have produced, at the end of 2025, 5 million cars. That's their production level. Now, we're going to assume that the robo-taxi fleet might have went live in its first city in 2022, maybe 2023, somewhere around there, but they were still selling cars even after that. But by 2026, they've got enough capital, they got the robo-taxi network big enough to where, look, they don't need to keep on selling you cars anymore, and they're done after 2025. 2026 and on, they're keeping all the cars for themselves. So that's where we see this total down here, is it's adding everything from 2026 to 2030 produced, that all that is just going into the robo-taxi fleet. And so over here in column C, we're choosing our growth rate and we're saying after 2025, we're assuming Tesla will grow on average 50% per year, which will get you to 100 million vehicles produced, or 100 million vehicles in the robo-taxi fleet. That is shy of the 250 million that we need. So in order to get to 250 million, we would actually need a 90% growth rate year over year. That's not too likely to me. So let's go with something that could be likely. I think 50% could be likely. Sure, a little bullish, but could be likely. So at a 50% growth rate, that would give you in year 30, you're producing 38 million vehicles a year. Again, you might say this is a little more on the extreme case, but okay. That would give them 100 million vehicles in the robo-taxi fleet. If we've got 100 million vehicles serving 60,000 miles a pop, that's 6 trillion miles served. Now the question is, how much are they going to charge at 6 trillion miles? Well, we know at 1 trillion miles served, they're charging 50 cents. And when you bring it down to 25 cents, you get 15 trillion. So since we're serving somewhere in between, we know we're going to be less than 50 cents per mile, but more than 25. And so when I did my estimates beforehand, I got to 33 cents per mile. So if we're charging 33 cents per mile, then we will have a total revenue served on 6 trillion of almost $2 trillion. And now our cost, again, assuming a 5 cents per mile, and our total miles driven being 10 trillion, would give you a cost of $500 billion. We get a gross profit of almost 1.5 trillion. Take out taxes, gives you a net income of about $1 trillion. With a 40 PE ratio, that gives you a $41,000 share price. All right, well, why don't we take a look at, and again, I think this is bullish, but I don't think it's unreasonable. I think this is still pretty likely and pretty possible. We could even take it a step further and say that maybe they grow at 1.6 or 1.65 or something. What if they were able to serve 9 trillion, 150,000? Well, if they're serving 9 trillion miles at 30 cents a cost, same cost per mile, we do all our calculations, we get to a net income of 1.3 trillion with a 40 PE. That's $54,000 a share price. Again, I think 65% growth is a little less likely after 2025, but I think 1.5 is totally reasonable. But let's go a little bit more conservative. Let's go with 1.4. I want to go with 1.4. Let's go with 1.3. This is almost kind of like right around where Elon Musk was saying, even a little bit less than Elon. Elon was targeting 20 million vehicles produced in 2030. So we're shy of his goal here. We're assuming that they're just growing at 30% year over year. I think this is totally achievable, what we're about to look at here. Now, that gives you 58, almost 60 million vehicles. So that would put you somewhere around a little over 3 trillion miles. So we're going to just even assume they're only serving 50 million miles. 3 trillion miles. They only have 50 million cars in the fleet. This is our more really bear case scenario. What would that be? So assuming that they're growing at 25% year over year, this is totally more the bear case. This is the bear case scenario right here. They only produce 15 million vehicles in 2030, well shy of Elon's goal. That would mean they could serve 3 trillion miles. And if we use our price, we know at 3 trillion, they've got to be charging less than 40 cents per mile. But they've got to be charging more than 33 cents per mile because that gets them 6 trillion. So we're using 40 cents here, which gives you a gross or total revenue of 1.2, cost of 250 billion, a gross profit of 950, take out taxes, gives you $665 billion in net income. With a 40 PE, that gives you a $26,000 share price. Again, I think this is the bearish model, and we're not even taking into account anything from energy. And again, when we're here, we still have so much more growth that you could argue that PE ratio could even be higher. Now let's go with probably something that I would consider in the middle. I would probably say a 40% is fair. I think a 40% is totally achievable, but that's a little bit higher than what Elon said. That gets you to Elon's goal in 2029. But I think this is a fair estimate. So if we're using that gets you to about 75 million vehicles. So now we're somewhere here in between serving 3 and 6 trillion miles. Really, you're serving 4.5 trillion miles. So that means at 4.5 trillion miles, we're charging somewhere between 33 and 40 cents a mile. I don't know exactly what we're charging. Let's assume that we're charging 35 cents a mile. So I'm actually going to change this one here in the middle so that we can get our estimate and see what does that look like. So we've got 45. And that gets you down to a $33,600 stock price, which I think is pretty reasonable. And again, we're not even including energy or anything like that. But let's go and take this even a step further, because we stopped our model at 2030 here. What if we would have just kept it going? Like, how long would it take them to get to 250 million vehicles to be able to serve and saturate the market? All right, well, let's assume by then, it just does get even a little bit slower. Maybe they're only growing at 30% a year. Again, this has us lower than what Elon his goal is shooting for in 2030. All right, and now we need to make this, extend that down. All right, that gets you to 82 million, 2032, 114 million, 2033, 155, 2034. Okay, so somewhere between 2034 and 2035, they would actually be able to get enough, just assuming this low rate of 30% growth per year, to get you to that $70,000 stock price. That doesn't even include anything from the energy business. Now let's assume a 40% growth rate, kind of in line with what Elon's goal is and what he was shooting for. Let's see, when would we hit our goal? 2033. 3 years after 2030, we would basically have enough cars in the robo-taxi fleet to do 15 trillion miles. So only 3 more years left, and boom, you could have a $70,000 stock. And the other thing to also consider is some arguments that could be made here is that, all right, well, why are we assuming that Tesla is going to get the whole market? Maybe there's competition. Well, why are we assuming that when we bring the cost down per mile to 25 cents per mile, almost 2.5 times less than what it costs to own a car, that the total miles driven is only going to increase 50%? Who's to say it won't increase 300%, 500%? And then even if Tesla's serving 15 trillion miles, well, now they only have 25 or 50% of the market. Totally different. You might say, oh, well, what about, China? Maybe they're not going to make as much per there. They're going to want to take a bigger cut, a bigger fee. They won't allow them, and China's going to be a huge part of the market. Who's to say America alone couldn't get this big to 15 trillion miles itself? I think it's at, 4 trillion miles now or something. I could be totally wrong. Somewhere around there, though. But who's to say that it can't triple or 4x when we get our costs down to 25 cents per mile? And now all of a sudden it makes people want to travel more. You can go out more. Maybe people stop using airplanes as much and they start driving more because it's cheaper and it's more convenient. You don't have to wait and spend as much time in the airport, and so it gets you there faster. And it's not a hassle. You don't have to spend your time driving or anything. You can actually do work in the back seat while you're on your way to your destination. You can just relax, watch a movie, whatever. So I think it's probably likely that if you got your cost down to 25 cents per mile, it's probably going to increase the total miles driven per year much more than just 50%. Another thing that you also have to keep in mind is if you're saying, oh, what about competition, is that, look, if you're talking about competition and we're just assuming 15 trillion is the total market size at 25 cents per mile, you're assuming that the competition has to be able to produce a car for less than 25 cents per mile, at least 20 cents per mile, to even be able to offer and help. I don't see anyone out there who has mentioned anything about that or even close to that. It could happen by then. I think maybe one or two could, but they're also going to have to get their scale up enough to serve. I mean, what you're saying, Tesla only has 50% of the market, so who else by that time has 125 million robo-taxis to go? I mean, who else? So that's why I'm pretty bullish on this, because I think a totally realistic, moderate, not extreme, is 33,600, and that's not even including energy business. So I think it could totally be a $40,000, $50,000 stock. And if we prove this, and if it shows, look, their total miles when we get our cost down that low is so much more, then it's going to be a higher PE ratio, and it could be a 100x in 2030. So really, and we looked at our downside here, it's really a $25,000 stock on our downside. So if Tesla chooses this model, then it's game over. Let me know what you guys think, though. Let me know where you see some flaws, and help me make my model better.